Your limit for today has been reached. Try again tomorrow.
So the bank doesn't forgive?
30 transfers.
Well, let's say I'm just forgetful.
That's it. I have nothing to pay with. I won't pay you. And now, sorry, bank, that's your problem.
Saved up, and bought myself a business jet. And then they came to him and said, whoops.
Where's the money?
Well, that's just sad.
There will be questions.
Your money is your money, until the bank decides otherwise. Today, with Victoria Tsoy, we'll talk about how the bank forms a financial opinion of you, why reputation is more important than your account balance, and how to build a structure that works for you, not against you. Victoria, welcome.
Hello, Mikhail. Thank you for the invitation.
The bank sees any client long before that client feels that something is wrong. Usually, a person comes to the bank and thinks that now I'll just go and do everything I want, everything I need at the bank. But it's not like that. It's not that simple. Victoria, at what point does a regular person, not an entrepreneur, just an individual, for example, start to pique the bank's interest?
Great question, actually. Interest arises at the moment when a client's behavior becomes uncharacteristic for that individual. That is, it could be suddenly appearing transactions at an unusual time, like during the night hours. It could be some large transfers, unexpectedly large sums arriving in the accounts, and what's more, which immediately start being transferred to other accounts of this client. At that moment, the bank starts to closely monitor what exactly is happening. In fact, behind this whole system is a technical monitoring service, so it's not actual people tracking what's wrong. And every bank has its own specific red flags that trigger the system. From that moment on, you can fall into their field of vision.
So it turns out, even when resolving the issue, say if an account was blocked for suspicious activity, you can't just say, well, you have to understand, this and that, so the bank doesn't forgive.
Well, why not? It will work. That is, if you have an evidentiary base that these transactions were legal. For example, you sold some property and you suddenly received several payments. Right, let's say a down payment of 30 million was made, and then another portion of the money arrives. Well, the scoring system reads it as a suspicious operation and blocks it. You contact the bank, prove you're right, and basically the issue is resolved.
Well, okay, if it's that relatively simple, then what does the bank collect about you from the first day of work? And do you even know about it?
Absolutely. Actually, yes. The bank compiles a full dossier on every individual and legal entity. So everything is included. Personal data, absolutely everything. Address, some personal data, information, because the bank is obliged to know who it's dealing with.
So ghosts won't be able to get through?
Theoretically possible, in practice, most likely not, because at the moment, additional biometrics or personal presence have been introduced everywhere.
And have you heard that one of the banks, maybe it's not just one of the banks anymore, well, let's not advertise, has this thing where if nothing happens on the account for a long enough time, say a month, 2, 3, then the account is closed and access to it is lost. And it turns out that to do anything at all with this account, a person redirects from their Kaspi account there, just so that there'll be at least some activity. So how should such transfers be viewed then? Essentially, is it a forced measure?
Yes, it is a forced measure. Actually, a number of banks at the moment, in order to take measures regarding terrorism and money laundering, yes, they are introducing such restrictions. So, according to the logic, again, of the scoring system, if a client doesn't use it, then they don't need it. Accordingly, if they don't need it, why should a person accumulate extra card accounts? The account is automatically blocked and closed. Naturally, they can't close it without your consent, but they can suspend it, yes. And in this case, the transfer can be explained. That is, that yes, indeed, I need this account for certain transactions. Well, for instance, not all banks, say, work with some foreign services, foreign subscriptions. A number of banks have restrictions on this option. And accordingly, the client is forced to maintain this card in order to use it for personal purposes. This is understandable, and so there are no problems with it. But if you make 30 transfers a day, to maintain this card, you still wouldn't transfer to it 30 times a day.
Well, there. Only if I transferred, say, 1,000 Tang, well, damn, I need another 10,000.
30.
Well, and suppose I'm forgetful.
That wouldn't be. Well, up to 5 to 10 transactions, 5 roughly, 10, yes, up to 10 transactions, in principle, it's acceptable. Because again, many, for example, receive their salary at one bank, but they find it more convenient to use another banking service. Accordingly, they're constantly making these transactions, moving between accounts. But for the banking system, it's better to make one large payment than 10 small ones.
And what if I have 30 relatives or 40?
Transfers are not prohibited, but not in one day.
I see. So I can't send money to all my relatives in one day.
Generally, you can, but if the amount exceeds a certain threshold, and each bank has its own limit, you just won't be able to. The banking app will say, "Sorry, your limit for today is reached. Try again tomorrow."
But that's sad. That's not fun at all.
No, actually, I think it's a measure to ensure there's control. Control is really needed in this area because there are so many fraud schemes now, like those money mules and so on. So it's better this way. Better to be safe.
Are money mules still active, or is it declining?
No, there's a lot of info that they're still around. And again, people get caught in these stories out of pure ignorance. Plus, those who use them aren't standing still. They're improving too, and it's very hard to prove. The chances are practically zero to clear your name, including your financial reputation. Because if a person is flagged in such a chain of events, it lowers their ratings in the whole banking system anyway.
Should we really expect to see a comprehensive social rating system implemented here, similar to what we've seen in China? In your professional opinion, how effective do you think such a system would actually be, and just how negative could the consequences turn out to be?
I think from a professional and theoretical standpoint, it would actually be very convenient, very right, because it would improve the financial literacy of the population as a whole.
So essentially a necessary step.
Yes, the problem for most people is being over-leveraged, meaning the threshold is much higher than they can afford because there are accessible services, installments, buy now, pay later, and people just lose their minds over it. And in the end, a person has more debt than 3 months worth of salary.
It's often perceived that the most inconvenient thing is when you do everything right but look like a violator. So, what specifically in a person's financial behavior looks like a red flag, even if everything's within a law?
Actually, the first little flag is, again, a high level of debt. When someone takes one loan to cover another, then a third, and so on, the question arises of whether they even understand what they're doing. Essentially, taking a loan isn't that big of a deal, generally speaking. Well, at the moment, of course, the situation is changing, getting tougher there. Lending thresholds, the system is tightening, biometrics, and so on, but nevertheless. And so, if a person just basically doesn't understand these debt obligations and he's in some kind of illusory world and he thinks that, well, it'll all work itself out. That, by the way, at this point is quite I would say, huge moment in terms of psychology, in terms of the approach to financial literacy itself. And here you kind of have to wonder if you can even work with such a person. For a bank as a financial regulator.
Then a reasonable question is, why doesn't the state just go ahead and cancel lending and installment plans? As someone who understands how money moves,
Well, actually, probably, because here, lending itself is a very large sector. That is, at the moment, speaking in terms of individuals, we're talking about some consumer loans in small amounts. But there's mortgage lending, there's leasing, and so on. So giving up such products would cause a lot of damage to the economy. Plus, in any case, the banking sector has to exist. Accordingly, they get certain interest from this, and no state is going to cut banks out of its story.
So it's more profitable for the state to keep developing all this. And just with restrictions based on this rating rather than limiting it.
Well, of course it's profitable. It's a certain, even, let's say, lion's share of the revenue, of finances anyway.
Listen, how did we live before without this?
Well, it all existed before, just not as accessible and not in the same format as now. Now you can get an online loan without even leaving your house, just by doing a video ID check, and that's it.
Are there any specific patterns then that are guaranteed to trigger a check? In this case, and that most people never even suspect?
When a person has a lot of open cards and accounts that they don't use, even in a single bank. Usually, it's profitable for a bank to open several cards for you and, accordingly, charge fees. It turns out that a person has 3 cards in one bank, 3 in another, and so on, so they're practically inactive. There are cards that he doesn't use at all. And then the question arises, why does a person need so many cards? For what? I mean, what goals is he pursuing if he doesn't close these accounts? Again, the existence of these accounts, they're all reflected in the banking history
Of an individual.
person.
Well, maybe he just wants to.
What's the goal?
Well, I've seen a lot of people whom I ask, why do you need so many cards? Or I just want to have them.
Well, for what purpose? You see, the question here is, what for?
And I don't know. I ask them, what for? They say, well, I want to.
Well, actually, no. This is a very critical risk because in reality, you need to understand that any card will be reflected in the system. Moreover, even if you closed it and didn't use it, it's kept in the archive for up to 7 years. And then, having 10 cards, let's say you apply for some larger scale service and you're simply refused. You're surprised. I'm solvent, I have a good salary, I pay taxes as an individual. What's the problem? And the problem is that you just have a lot of strange cards open.
So, in this situation, what exactly should a person with an active cash flow do to avoid becoming a suspect prematurely and unintentionally?
Any flow, any of your actions, they must be confirmed. Relatively speaking, you're an average person who spends, say, up to $1 million a month, and then your expenses and income suddenly spike. From where? That is, when a salary and so on comes in, the bank sees that too. There are certain payment purpose codes there. It's easily explained. They won't ask questions. Say, you suddenly became the CEO of a company, having been a manager. You were getting a certain amount, became CEO, and your income tripled, for example. You receive a salary, there are no questions for you. But you didn't become CEO, and suddenly you start receiving some huge sums. Or you start spending more, say 3 or 4 times more than the money coming into your card. At the same time, let's say these funds appear by way of cash deposits to your card by some third parties. The bank sees this.
Here, Victoria is a question then. Is financial reputation actually a real thing, or is it a metaphor? Does the bank really keep something like a dossier on every client? And they have these huge folders and archives, and they can look if, say, Anatoly or Ignat comes to them. And they can say about each one, okay, this is a good client, this is a bad one.
Yes, in fact, financial reputation is a thing, but it doesn't look like some person, a detective, is sitting there and, let's say, writing in a little black book, today you paid, today you getting paid back the money. No, actually, all of this has also been moved into a technological format for a long time now. And yes, it's actually very easy to lose your financial reputation. For banks, the most important criterion will be if you haven't fulfilled your obligations. It doesn't matter which ones. I mean, it could be a credit card, it could be consumer loans, or something else. So you only have to violate it once, and then there's your behavior. I mean, different situations happen in life. For example, a very solvent person suddenly finds themselves with nothing, right? Meaning they were always paying their loan, fulfilling their obligations. And they were like a very diligent, exemplary bank customer. But something went wrong, and unfortunately, they can't fulfill their obligations. That doesn't mean they'll immediately lose their financial reputation, provided that they exhibit the right behavior. What do we mean by right behavior? Meaning they don't avoid their responsibility. They contact the bank themselves. They say, look, these certain circumstances have arisen for me. At the moment, I can't fulfill my obligations, but I'm not refusing responsibility. Is it possible to review the payment schedule? Is it possible to get some kind of deferment, shift the payment date, and so on? So in this case, the financial reputation won't be damaged. But if a person takes the position that that's it, I have nothing to pay with, I won't pay you, and now, sorry bank, that's your problem, then yes, absolutely, they lose their financial reputation. Furthermore, despite the non-disclosure rule, when applying to another bank, for instance, they also fall into a risk zone.
And can a person not know that their reputation is already ruined? Or will they never find out about it?
Yes, they can. Actually, this risk category, it arises much earlier than a person might guess. They'll only guess when, for example, they're contacted and asked for, say, documentary proof, or there are some questions. There have been cases where a person simply doesn't receive an amount on their card. They know that now, today, relatively speaking, they should receive a payment, but they don't get it. The bank doesn't block this payment, but temporarily holds it. Naturally, the client contacts the bank to clarify what's going on. And at that moment, they find out that, as it turns out, there are certain questions for them. So it doesn't look like, say, you've fallen into a risk category and immediately the bank runs after you to ask questions. No. It's at the moment when you reach out yourself, knowing you have a certain amount or you're expecting a transaction or bank confirmation, and it doesn't happen. And at that very moment, a person finds out that, as it turns out, their financial reputation is already ruined. But there's no need to fear this because in reality, it can be restored. I mean, just as you can lose it, you can also get it back quite easily.
You've given us hope, so we don't lose faith in banks.
Yes.
It's possible to lose access to the entire system without breaking a single law, right? And that seems like the most unpleasant discovery of this conversation, doesn't it? So what kills the financial reputation the fastest then? What single specific action can just wipe out everything a client has built up in their file over the years?
Well, what do you think happens in relationships between just, regular people?
Maybe they just disappear.
Breaking obligations, borrowing money and not paying it back. Basically saying, I'll pay you back on the 5th, and then just vanishing.
Have you personally seen people who lost access to the banking system entirely, not because of a criminal record, but just because the system shut its doors on them? And what happens to them after that?
Actually, losing access specifically to non-cash transactions in the banking system is very easy. So we're not talking about breaking the law at all here. We're not talking about criminal liability. It's basic things. So here again, for example, you borrowed some money. You took a loan from someone, right? You wrote a receipt on a napkin. The person waited a year, 2 years, 3 years. Well, you forgot about it, but he's still waiting. He goes to a notary, gets an executive order stating that you do indeed owe him money. A case is opened, a private bailiff takes it on and just blocks all your card accounts instantly. That's it. So essentially, you haven't broken the law, you haven't done anything unnatural or criminal, but you have no access to the system, meaning you can't use it anymore.
Is it possible then to restore that reputation if it's already been ruined?
Yes,
What does that actually look like in practice?
it can be restored, but the first thing is, it's not that fast. But it's also not as scary as many people think. In reality, yes. So you'll need to take on some small obligations step by step. Usually, this is how they advise people with a significant number of overdue days to fix their credit history. It's a negative rating. It affects many parameters overall, specifically in the lending sector and the banking sphere. Just take out some small consumer loans. Repay them strictly according to the schedule, no matter what the payment amount is, right? But by no means should you pay it off early. And don't miss the final settlement date. If you use these small credit lines for a certain period of time, you'll restore your reputation very quickly.
And why can't you pay it off early? Well, let's say I took out a loan, but I don't need it for years. I just needed it in the moment, but they only offer it for, say, 60 days. But I need it now. I know I can close it tomorrow, but I need it right now.
The scoring system will immediately flag it as a suspicious transaction. So if you suddenly received, say, $100,000 on your card every month, but you have a $500,000 loan and you need to close it all at once, and suddenly $500,000 appears.
Suppose I have the money, but it's in another bank. Well, I want to buy a car today. And they tell me, we'll give you a loan right now, no problem. And I say, well, it's in another bank. While I wait for that, let me just take it from you. They say, we only have it for 60 days. I say, well, I can close it as soon as tomorrow. I go ahead and buy the car. Then tomorrow I easily withdraw from the other banks. I apply, take the cash, and bring it to them. Is that also bad?
Yes, unfortunately, that's also bad. Although many people say that paying off early is great, I save time, I save money, but in reality, you've lost your financial reputation.
So I should have waited another 60 days.
Yes, at least wait no less than 30 days. So at least 30 days is always a step that allows the bank to get its rewards for you using those funds. And then the severity decreases, that kind of strictness. But if, for example, it happens within a range of up to 7 business days, then yes, unfortunately, the person seemingly did a good thing, returning it for you and for themselves, but at the same time, they've still entered this risk zone.
Speaking of people, I always want to say that most don't have any clear financial structure. Every person is unique, every person is an individual, and every person thinks differently. There's an account where everything goes and a feeling that that's how it should be, like everything's fine. Victoria, how often do people come to you whose personal and business money are completely mixed up? Is this an exception to the rule at all, or is it a norm that occurs very frequently?
For the segment of individual entrepreneurs, small businesses, and the IT sector, it's more of a norm than an exception. So there are cash flows. In the beginning, at the initial stage of the business, they don't get such large sums, and it seems to them that everything is fine, like it's all together, it's all mine. But the larger the turnover, the more it starts. This whole thing where it's unclear, like, is this money for the business or for personal needs? And yes, at that point, they wonder why, even though the cash turnover seems large, I can't actually increase the inventory. I can't invest further in the business because I don't have enough.
So what should be done?
Start separating them. At any point, start separating them. If it's business money, we open a business account and use only that account. If it's for personal needs, don't buy personal Maybachs, jets, and so on with a business card. Absolutely not.
Only with a personal card.
Yes, with a personal card.
But then there will be questions.
There won't be any questions if you correctly document the receipt of funds, meaning within the business, you keep records, maintain all documentation, make a profit, close the financial statements, receive dividends, and buy yourself a yacht.
Oh, by the way, about that, there's also this concept of savings. Suppose a person saved cash until retirement, until 70 years old. So he saved and saved and saved and saved and bought himself a business jet. And they came to him and said, "Whoa, where'd that come from?" He says, "Well, I saved here, put aside some change there. Well, I saved up over 70 years. So how does it work then?"
And here, the income declaration option should kick in. That's exactly why they gave everyone the chance to admit how much money was under the mattress. At that moment, you just had to declare the amount, like, yes, indeed, I have these savings. So as of now, the tax administration system is improving. With every, not even year, let's say day. And there was indeed, let's say, a call for people to please say who has how much. But as a rule, people decided to stay silent. But tomorrow, for example, like the story you told, you saved and then bought, there will be a question.
Or only buy abroad.
No, or then pay income tax on that amount.
It's a shame to save for 70 years and then pay for 70 years,
That's the system. That's how it works, unfortunately.
even if he has a great rating.
Yes, nevertheless, he will have to pay taxes and then please use your property.
Yeah, then he won't buy a business jet. He'll have to wait another 20 years.
Possibly, yes. But then again, we're talking about how in these moments, just saving or just putting it away somewhere. But where? I mean, there are many financial tools. You really need an understanding of financial literacy. If a person has this asset, you need to know if it's generating extra income or not. What are they going to do with it tomorrow? Just setting it aside, but then again, money loses value. There's inflation either way.
So, what specifically then do you see when you look at these financial messes from the inside, and what stands out the most among them?
First off, it's that, yeah, a personal card is used for business purchases, while a business card or account is used for personal ones. When you ask what the company's income is, they can't answer. Well, not the company, but the individual as a sole proprietor. How much net profit did you make last month? He says, I made 10 million. 10 million is your turnover. That's not net profit. What do we mean by net profit? An asset you can withdraw is what's left after you've made a profit, paid all your obligations, paid your taxes, and that's the net remainder. That is your asset, the one you can actually use. And unfortunately, not everyone can answer that question.
And he asks you, "So, how many years do I have to save?" And you say, "Until you're 70.
He says, why? It's my money. I'm the one who earned it. Why can't I use it? Like, what's the problem? And that's when you realize the person is very far from understanding what financial literacy really is.
Is there a trigger point when this becomes a real problem? And how can you recognize it yourself, perhaps? Take this man, for example, a guy who has a 10 million turnover and says, "This is mine."
Yeah, and when he simply can't, let's say, grow the business because he needs $10 million for inventory, or perhaps he needs it for some significant personal expense. And he can't figure out where the money went. And that's when it hits him. Wait, what am I even working for? So during the month, there's cash flow, and he feels like he's living well, treating himself to entertainment, travel, and so on. The month ends and there's no money. Technically, it's there, but it's not. And when a person starts to wonder, why is that? That's exactly when it clicks. That whole idea that something needs to change.
A pig in a poke. Where's the money? But there's no money.
Yeah, they exist on paper, but in reality, they're never there. And most people are living in exactly this kind of illusion, especially small individual entrepreneurs. Meaning the segment that's far from the actual model of running a grown-up business. Grown-up business is always about planning. It's always about separating income and expenses. It's always about understanding the strategy of where we're going. But this market segment is just so chaotic.
Well, okay. Speaking of financial structure, then, yeah, but it's not always just for the big guys. And structure is for those who want to grow and not lose what they already have, it would seem. And here, a perfectly logical situation arises, where a person earns well and thinks about growth. But the financial structure is non existent. When is it time to start changing that?
Right now.
Let's just get up and do it right now. There's really no time to waste.
When asking this question, first of all, ask yourself, what assets do I have at this moment? Meaning, even with a high salary, if you don't have any assets, and if you still have doubts about what you would do tomorrow if you were suddenly fired today,
So, if I have a yacht, I can't be that happy?
well, why not? If you have a yacht, you've already acquired an asset. I mean, a yacht is already, even a fixed asset, it's a very good investment.
Well, we don't have an ocean.
I think a person who has a yacht wouldn't be asking questions about financial literacy.
Well, what if someone saved for 70 years and has a yacht? So, how do you properly separate personal and business if it's all mixed up? And where should you start? If a person has everything mixed up, personal and business, and it seems okay, but also scary, what should they do?
First of all, start separating them. Just make a clear plan for yourself that these are strictly business expenses and these are my personal ones. And then my personal expenses are paid only from my personal account.
And if you could take a moment to think about it, if you could give just one specific, actionable thing that a person should really focus on doing today, what would that be then? I'd love to hear your thoughts on that.
Actually, financial literacy isn't about understanding where it all comes from, but it's important to understand the expense categories. And the most basic, simple exercise is to write down all your expenses for the last 24 hours. You'll definitely find items that you can easily do without every single day. And that's where your empire will begin.
And what about the surplus? Well, okay, I'll cross him off. I'll manage. But where does this go? Investments. Ah, investments.
Now that's a different story. Those are investments, right? That's the proper allocation of surplus.
Oh, by the way, a question came up. If someone over 70 years put a little bit onto some card and it was just a regular debit card, he kept putting in small amounts and he accumulated so much money, a lot, over 70 years putting it into this account. And if he wants to suddenly withdraw it all in cash, will that trigger anything? No. And will he have to pay taxes?
He won't pay tax because it will show that he was making monthly deposits. It's like a depository system.
So let's say,
Plus a 70-year period. It is such a long period of time after all, and during that time, well, his card would have been reissued at least 20 times, at the very least, because a card's lifespan is always limited, it's not indefinite. And when the card is reissued, the bank will definitely review the client's file. They'll understand the source of the funds, so no. So if you're systematically depositing into a specific account every month, then no.
but what if he, this business owner who spent 70 years building an empire, says it's a gift and transfers it to his own account? What will the bank do then?
Well, look, what do we mean by the word gift? That it's some third-party individual or even a legal entity, like a company, giving something to an employee. But never giving it to yourself.
Oh, you can't do that?
Nope.
I thought legally you could do that.
Well, no.
I mean, I'm putting it on the card for free.
No, unfortunately, it doesn't work like that. You can do it, meaning it's not forbidden, but it won't be considered a transaction that isn't subject to monitoring.
So confirmation will be needed either way?
Of course.
And if he, say, in his 70s, gives 10 million to his son and says it's a gift, will that be considered one?
The son must declare that gift.
Ah, so he won't be buying a yacht.
He can buy it, but only after paying all the tax-related costs.
Interesting.
This is within the framework of Kazakhstan's legal system that we're discussing right now. Perhaps other countries have their own specific nuances that allow for such actions.
Or not, if they don't have.
Most likely not, because after all, if you look at it from a tax administration perspective, from the perspective of the banking sector specifically, conditions in other countries are much stricter. That is, it's impossible there, unlike here, to get 10 cards in different banks. You have to prove why you need a card from another bank. If you already have a card that you can use for online transactions, that you can withdraw cash with, why do you need another card? So there's quite a bit more scrutiny there. But then again, it's total control. It's order.
So why can legal money look like money laundering then?
Because the flow plays a very big role here. That is, how they came in and where they went. You can receive, say, 10 million on your card and immediately transfer 10 million somewhere else. They don't stay with you for even 24 hours, so to speak. That's it. So that's already.
You also have to hold it for a few days.
Well, if you don't want to attract attention to yourself, it's better not to do such things at all. So, if we're talking about a situation where a person, for example, sold a car, sold some real estate, and suddenly a large sum hit their account, it's clear that currently no one carries 20 million in cash around in a briefcase. So it's done via transfers to a checking account, to a card. But in this case, you can simply confirm where the money came from, show the origin, show the sales contract, that the deal was registered. Moreover, in Kazakhstan, all systems are now integrated. And if you carry out such a transaction, it's already visible. Most likely, there's a 90% chance the bank won't ask any questions. But if you suddenly receive this sum from abroad and immediately transferred it somewhere else again, then naturally there are questions.
And to wrap up today's episode, I was wondering if you might like to take a moment to share one final key point with all of our listeners and viewers. It would be great to hear your closing thoughts.
Actually, if I had to choose, I'd probably like to sincerely wish that all of your monthly income always comfortably covers all of your expenses.
The bank doesn't know your intentions. It only sees patterns and decides based on them. How your money looks in the system, the reputation you build, and whether you have a structure. These aren't technical details. They're the foundation. Victoria, thank you very much for such a fascinating conversation.
Thank you, Mikhail. Indeed, the conversation was very interesting, and I hope will be helpful to our viewers and listeners.
I'm Mikhail Svetley. This was the Chief Central Asia podcast. We're on YouTube, Spotify, and all podcast platforms. Subscribe and turn on notifications so you don't miss any new episodes.